Welcome back. Today we're diving into the results of a major player in the pharmaceutical space, Cipla Limited. Cipla is a global pharmaceutical company with a strong presence in India and many other countries, known for its wide range of medicines.
That's right. They are a household name in many parts of the world, involved in developing and manufacturing active pharmaceutical ingredients, formulations, and even some consumer healthcare products.
So Cipla has released its audited financial results for the fourth quarter and the full financial year ended March 31, 2025. The board of directors approved these results at their meeting on May 13, 2025. We'll be looking at both the consolidated and standalone figures to get a complete picture.
Sounds good. Let's start with the big numbers.
Absolutely. Let's begin with the consolidated results for Cipla. How did their revenue from operations look for the fourth quarter of FY25, that's the quarter ending March 31st, 2025, compared to the same quarter last year?
Okay, for the fourth quarter ended March 31st, 2025, Cipla's consolidated revenue from operations stood at 6,729.69 crore rupees. Comparing this year over year, in the same quarter of the previous year, so March 31st, 2024, the revenue was 6,163.24 crore rupees. So that's a decent increase year over year.
That's a healthy jump. Now, how does that Q4 performance compare to the immediately preceding quarter Q3 of FY25? The quarter ended December 31st, 2024.
Right. Looking at the quarter-over-quarter performance, the revenue for Q4 FY25, which was 6,729.69 crore rupees, was actually a bit lower than the Q3 FY25 revenue of 7,072.97 crore rupees. So a sequential dip there.
Interesting. A year rise but a QOQ dip. What about their profitability? Let's talk EBITDA, earnings before interest, taxes, depreciation and amortization. How did that look in Q4 FY25 on a consolidated basis, both YoY and QOQ?
Okay, for EBITDA in Q4 FY25, we can calculate it. The profit before exceptional item, tax and share of associates was 1,504.30 crore rupees. To this, we add back finance costs of 14.02 crore rupees and depreciation and amortization expense of 308.73 crore rupees. That gives us a calculated EBITDA of around 1,827.05 crore rupees for Q4 FY25. Now, for the year-over-year comparison, in Q4 FY24, the profit before exceptional item, tax, and share of associates was 1,259.26 crore rupees. Finance costs were 17.59 crore rupees and depreciation was 288.34 crore rupees. So the EBITDA then was about 1,565.19 crore rupees. So a solid increase in EBITDA year over year.
That's a good YoY improvement in EBITDA. And sequentially from Q3 FY25 to Q4 FY25?
Sequentially, the Q4 FY25 EBITDA of 1,827.5 crore rupees is lower than Q3 FY25. In Q3, profit before exceptional item, tax and associates was 1,916.09 crore rupees. Finance costs were 14.64 crore rupees and depreciation was 279.80 crore rupees. So Q3 EBITDA was approximately 2,210.53 crore rupees. So a sequential decline in EBITDA, similar to the revenue trend.
Okay, so that pattern of YoY growth but QOQ decline seems to be holding for EBITDA as well. What about profit before tax or PBT on a consolidated basis?
For Q4 FY25, the consolidated profit before tax, and this is before exceptional items and share of associates, was 1,504.30 crore rupees. This is up from 1,259.26 crore rupees in Q4 FY24. So a healthy year-over-year growth in PBT. Sequentially, however, this Q4 PBT of 1,504.30 crore rupees is down from 1,916.09 crore rupees in Q3 FY25.
And the bottom line, profit after tax or PAT?
The consolidated profit after tax for Q4 FY25 was 1,214.14 crore rupees. This is a significant improvement from the 931.87 crore rupees reported in Q4 FY24. So, strong year-over-year PAT growth. But again, on a quarter-over-quarter basis, the Q4 PAT is lower than the 1,574.59 crore rupees they posted in Q3 FY25.
And this translates to earnings per share or EPS?
Yes, The basic EPS for Q4 FY25 was 15.13 rupees. This is up from 11.63 rupees in Q4 FY24. Sequentially, it's down from 19.45 rupees in Q3 FY25.
Is there any significant other income we should be aware of that might be influencing these numbers?
For Q4 FY25, consolidated other income was 289.46 crore rupees. This is higher than the 249.33 crore rupees in Q4 FY24 and also higher than the 221.61 crore rupees in Q3 FY25. So other income has shown an upward trend both YoY and QoQ for the quarter.
So for the quarter, it's a consistent story. Revenue, EBITDA, PBT, PAT, and EPS all up year over year, but down quarter over quarter, with other income being an exception showing growth in both frames. Now, what about the full year performance for FY25 versus FY24 on a consolidated basis?
For the full financial year ended March 31st, 2025, consolidated revenue from operations was 27,547.62 crore rupees, up from 25,774.09 crore rupees in FY24. The profit before tax before exceptional items and share of associates for FY25 was 6,820.81 crore rupees. This compares to a profit before exceptional items and tax of 5,896.72 crore rupees in FY24. And the consolidated profit after tax for FY25 stood at 5,269.20 crore rupees, a nice increase from 4,153.72 crore rupees in FY24. The basic EPS for FY25 was 65.29 rupees, up from 51.05 rupees in FY24.
That full year picture looks quite positive then. Now, let's switch to the standalone results for Cipla. How do these compare for Q4 FY25? Let's start with revenue from continuing operations.
Okay, for the standalone entity, revenue from continuing operations in Q4 FY25 was 4,797.89 crore rupees. This is up from 4,036.66 crore rupees in Q4 FY24. Sequentially, it's slightly down from 4,970.88 crore rupees in Q3 FY25.
And standalone EBITDA from continuing operations?
For standalone Q4 FY25, the profit before exceptional items and tax from continuing operations was 1,460.89 crore rupees. Adding back finance costs of 3.49 crore rupees and depreciation of 147.70 crore rupees, we get a calculated standalone EBITDA of about 1,612.08 crore rupees from continuing operations. Year over year, this is up from Q4 FY24, where PBT from continuing operations was 1,224.24 crore rupees. Finance costs were 5.45 crore rupees and depreciation was 136.81 crore rupees, giving an EBITDA of around 1,366.50 crore rupees. Sequentially, the Q4 standalone EBITDA is down from Q3 FY25, where PBT from continuing operations was 1,704.35 crore rupees. Finance costs were 3.55 crore rupees and depreciation was 142.62 crore rupees for an EBITDA of about 1,850.52 crore rupees.
So a similar trend on standalone EBITDA, YoY up, QoQ down. What about standalone PBT and PAT from continuing operations?
Standalone profit before tax from continuing operations before exceptional items for Q4 FY25 was 1,460.89 crore rupees, up from 1,224.24 crore rupees in Q4 FY24. Sequentially, it's down from 1,704.35 crore rupees in Q3 FY25. Standalone profit after tax from continuing operations for Q4 FY25 was 1,485.40 crore rupees compared to 982.03 crore rupees in Q4 FY24 and 1,438.15 crore rupees in Q3 FY25. So PAT is up both YoY and QoQ here.
That's an interesting divergence for PAT, being up QoQ on standalone. Was there a significant exceptional item in the standalone results for Q4 FY25?
Yes, there was. For Q4 FY25 standalone results, there was an exceptional item of 294.66 crore rupees. The notes state this is a reversal of an impairment loss recognized in earlier years for an investment in a wholly owned subsidiary, Cipla Pharma and Life Sciences Limited. This positively impacted the PBT and PAT for the quarter.
That explains the QoQ PAT jump on standalone. How about the full year standalone performance for FY25?
For the full year FY25, standalone revenue from continuing operations was 19,044.85 crore rupees, up from 16,574.34 crore rupees in FY24. Standalone profit before tax from continuing operations after the exceptional item gain was 6,468.82 crore rupees for FY25, compared to 4,946.97 crore rupees in FY24. And standalone profit after tax from continuing operations for FY25 was 5,157.65 crore rupees, up from 3,714.19 crore rupees in FY24.
Okay, that gives us a good overview of the headline numbers. What about profitability margins? Any comments on EBITDA margins or net profit margins for consolidated results?
For the consolidated Q4 FY25, with an EBITDA of roughly 1,827 crore rupees on revenues of 6,730 crore rupees, the EBITDA margin is around 27.1%. The net profit margin with PAT of 1,214 crore rupees is about 18%. For the full year FY25, the consolidated PAT margin is around 19.1%. These are healthy margins.
And were there any exceptional items in the consolidated results for FY25 or the comparative FY24?
For FY25 consolidated, there were no exceptional items reported. However, for the year ended March 31st, 2024, there was an exceptional item charge of 194.82 crore rupees, which related to an impairment charge for intangible assets and wind-down costs for Pulmazole. So, FY25 consolidated results are cleaner in that respect.
Let's touch upon the balance sheet. Any key highlights from the consolidated statement of assets and liabilities as of March 31st, 2025?
As of March 31st, 2025, Cipla's consolidated total assets stood at 37,387.04 crore rupees, up from 32,717.82 crore rupees a year ago. Total equity attributable to owners increased to 31,193.45 crore rupees from 26,706.43 crore rupees. Key asset components include property, plant and equipment at 4,813 crore, goodwill at 3,270 crore, and significant financial assets including investments and trade receivables.
And what does the consolidated cash flow statement tell us? Any major movements or dividend declarations?
The consolidated cash flow from operating activities for FY25 was strong at 5,004.98 crore rupees, up from 4,133.91 crore rupees in FY24. Cash used in investing activities was 3,691.14 crore rupees, mainly due to purchase of current investments and PPE. Cash used in financing activities was 1,292.79 crore rupees, largely due to dividend payments. And speaking of dividends, yes, the board has recommended a final dividend of 13 rupees per equity share and a special dividend of 3 rupees per equity share on the occasion of completing 90 years of the company. This takes the total dividend to 16 rupees per equity share for FY25. The record date for this dividend, if declared at the AGM, will be June 27, 2025.
That's a nice payout for shareholders. Now, let's look at Cipla's consolidated segment performance. What are their main segments and how did they do in Q4 FY25?
Cipla reports primarily under two segments, pharmaceuticals and new ventures. For Q4 FY25, the pharmaceutical segment reported revenue of 6,503.63 crore rupees and a profit before tax and interest of 1,572.06 crore rupees. The new ventures segment had revenue of 288.48 crore rupees and reported a loss before tax and interest of 53.74 crore rupees. Clearly, the pharmaceutical segment is the main engine, contributing almost all the profit.
How does this compare to the previous year or previous quarter for the segments?
Year over year for Q4, pharmaceuticals revenue grew from 5,996.38 crore rupees and its profit also grew from 1,322.45 crore rupees. New ventures revenue also grew from 212.99 crore rupees and its loss narrowed slightly from a loss of 45.60 crore rupees. Quarter over quarter, pharmaceuticals revenue was down from 6,777.84 crore rupees in Q3 and its profit was also down from 1,888.86 crore rupees. New ventures revenue was down from 341.30 crore rupees in Q3 and it swung from a profit of 41.87 crore rupees in Q3 to a loss in Q4.
So the segmental performance mirrors the overall consolidated trend for the quarter. YoY growth, but QoQ decline, especially in the dominant pharmaceutical segment. Are there any significant notes or events from the report that we should highlight?
A very significant note present in both standalone Note 2 and consolidated Note 2 results pertains to the National Pharmaceutical Pricing Authority or NPPA. NPPA had issued several demand notices to Cipla starting from 1998 for alleged overcharges on scheduled drugs. This matter has been through the Bombay High Court and the Supreme Court and is still under litigation. The total amount covered by these notices, after removing duplications, aggregates to 2011 crore rupees, comprising a principal of 863 crore rupees and interest of 1148 crore rupees. Cipla has been legally advised that it expects a favorable outcome and therefore has not made any provision for this. This is a long-standing issue and a material contingent liability. Another point from the standalone results, Note 6 and 18, is the disclosure around discontinuing operations related to the transfer of their generics business undertaking to a wholly owned subsidiary, Cipla Pharma and Life Sciences Limited. This transfer was completed on February 29, 2024. The financials for the previous year, FY24, show the impact of this restructuring.
That NPPA matter certainly sounds like a key risk to keep an eye on. Now, a very crucial part, the auditor's report. Walker Chandiok and Company LLP are the auditors. What's their opinion on both the consolidated and standalone financial results for the year ended March 31, 2025?
For both the consolidated and standalone annual financial results for the year ended March 31, 2025, Walker Chandiok and Company LLP have issued an unmodified opinion. This means that in their view, the financial statements give a true and fair view in conformity with the Indian accounting standards and other accounting principles generally accepted in India. The Global Chief Financial Officer has also issued a declaration confirming this unmodified opinion.
An unmodified opinion is what investors like to see. Did the auditors highlight any emphasis of matter or key audit matters that we should be aware of?
In the report on the consolidated financials, under the Other Matters section, they do mention that the financial statements of 30 subsidiaries, whose financials reflect total assets of 11,770.79 crore rupees and total revenues of 4,271.35 crore rupees, were audited by other auditors. They also mentioned that the group's share of net loss in 2 associates was based on financial statements not audited by them, and for 5 other associates, it was based on unaudited financial information. However, they explicitly state that their opinion on the consolidated financial results is not modified in respect of these matters. This is a fairly standard disclosure for large, complex consolidated entities with numerous subsidiaries and associates audited by different firms globally. They did not list any specific key audit matters in the snippets we have beyond the standard responsibilities.
So no red flags from the auditors themselves. Given all this, the financial performance segment details significant notes like the NPPA issue and the clean audit report. What's the general outlook for Cipla? And a quick disclaimer, of course.
Disclaimer: we advise investors to check with certified experts before taking any investment decisions. Cipla has demonstrated strong full-year growth in FY25, both on the top line and bottom line for consolidated and standalone continuing operations. The quarterly performance showed year growth but a QoQ dip, which might warrant watching in the coming quarters to see if it's a trend or a one-off. Profitability margins are healthy. The pharmaceuticals segment continues to be the powerhouse. The dividend announcement is positive for shareholders. The key risk clearly remains the NPPA litigation, given the substantial amount involved. While the company is confident, an adverse outcome could have a significant financial impact. The business restructuring with the generics undertaking seems to be settling in. The clean audit report is a definite positive. Overall, the operational performance looks solid, but the NPPA overhang is a significant factor to monitor.
That's a comprehensive summary. So to recap, Cipla's Q4 FY25 showed good year-over-year growth but a sequential dip from Q3. The full-year FY25 performance was robust. The pharmaceutical segment is the star. Dividends are up. The auditors have given a clean chit. The major watch-out is the long-pending NPPA dispute.
Precisely. Solid operational performance with a notable contingent liability.
Excellent. Thanks for breaking that down for us. And thank you to our listeners for tuning in.